So Netflix, market cap $230 billion, revenue of 25, PE 82, X, profit margin 11%, check mark there. So they spent a lot of money on their material. So here's the deal, guys. Average in the last 5 years, free cash flow is negative. So the price of free cash flow is already going to be an X because you can't divide by a negative number. But the free cash from last year is $2 billion. Okay, no dividend. Return on invested capital. This is kind of weak. 4% and return on assets is 7.36. That's kind of weak if you ask me, but whatever. So far, an X for PE, a check for profit margin, and an X for 5-year free cash flow growth. Sorry, 5-year free cash. The 20 times free cash flow is an X. The growth is probably a check, but we'll look at it later. Income statement. Income statement.
Matt said he laughed at your joke pretty hard.
Oh, good. I'm glad to hear that. 8.83 to $25 billion. Check mark there. And I guarantee 2020 was a huge, yeah, they went up 25% in 2020 alone. Profit, look at this, guys. 186 million to 2.76 billion, check mark. By the way, I think Reed Hastings, their CEO, is an absolute douchebag who just loves to hear himself talk. He's an absolute tool. He talks about how amazing he is at everything he does. He's a tool, but it's a great service. Shares outstanding, X here as well. 429 million to 442 million. X as well. So far we have an X on PE. We have an X on shares outstanding, and we're going to soon have an X for the free cash flow times 20, average of the last 5 years, etc. Cash on hand, 9.76 billion. Current liabilities, 7.8. Check mark there. Free cash flow growth. Well, this one's this one's right though. Why is this? This one's correct. All right, free cash flow growth. Negative 1.7 billion to a positive 1.93 billion. Guys, look at this. They just started having free cash flow positive last year. Look at all these years of negative. Now, I will give them, that last one was a positive. I guarantee, so in capital expenditures, guys, there's two capital expenditures. There's maintenance capital expenditures and growth capital expenditures. When I say maintenance, I don't literally mean, fixing a wall. What I mean is ongoing costs, capital expenditures they need in order to operate their business. There might be capital expenditures that are growth capital expenditures, things like building more warehouses to get more sales in, to get more inventory in, things like that. I guarantee that a lot of their capital expenditures were growth capital expenditures here. The question is, did they split that out in their 10K? Most companies do not do that. Vast majority do not do that, but that is important to understand. And even if you don't see it in their 10K, it's a good question for investor relations when you ask them, guys, how much of this capital expenditure was X, was Y, whatever it was? How much of it was growth? How much was maintenance? They should be able to provide that answer for you. So you can understand really what they're spending on. Even last year, even though they had positive free cash flow, you still want to understand how much this number was, I'm sure buying new media or making new shows, things like that, they might capitalize along the way. So, and again, their average free cash flow was negative over the last 5 years. So we can't really have a multiple of a negative. We can, but negative 1.54 times 20 is a negative $31 billion. We can't, that's not possible. So it's still an X. You need a positive number. So Netflix is a tough one because I just don't believe it's got, I think it's just hard to, again, this is one of those companies that I think is going to be around for a long time. But remember, first off, everybody has a streaming channel now.
That's the thing.
Everyone has streaming now. I mean, Disney just announced 100 million people they beat.
Apple has their studio. They just said that they're coming out with all new content, documentaries and stuff, partnering up with all these Earth places that want to go in the ocean and the space and all that. Everybody has one. I mean, this Peacock thing, this came out of nowhere. They're great. They got The Office now. Yellowstone, Suits, so... Suits is a bomb show, by the way.
Arturo and Marco, thank you very much for signing up for our Patreon. You guys just did it last 2 minutes.
Marco came in. Good.
What was that?
Marco's cool. I like him.
Marco?
Yeah.
How do you know him?
I don't know. He always makes good comments in the chat.
In this chat?
Yeah.
Obviously, because he's not in the Patreon. The Discord channel is awesome, guys. So, that was Netflix. We have one more to do.
Let me go technical.
Oh, yeah, go technical.
So, I talk about the gaps that need to be filled. This was a gap back in October. And this is a gap that happened in January. So you can see that even though the stock price gapped down, and this is an overnight movement, so market closes here, opens here the next morning, and you get that gap down, that big black space in there. So I always say the gaps almost always fill in, and they have. So your stock price moved back up. With this one, stock price gapped up and it came back down. So just remember, when you see gaps on a chart, just know that there's a high likelihood that those gaps are going to fill. It might take time, but it's going to happen. From what we can do with it. I mean, we're getting into this oversold area. This is another one. I know it's an expensive stock, but it's a popular one for your fractional shares if you want. If it's going sideways, if you really want to do something with this, you can put a tracker share on it. I personally wouldn't right now. I just let it go over time. And eventually Netflix is going to turn up. It's just a matter of time. Keep an eye on it. This is a good watch list one. Maybe don't put a tracker share on it. Don't sell your car this time.
Bailey told me he also signed up. I haven't gotten the email yet, but thank you very much, Bailey, for signing up for our Patreon. Much appreciated. It's going to be one of the best financial decisions you make for the rest of your life.
Thanks so much for watching the video. We hope you were intrigued. If this style of investing speaks to you, click the link below to join our Patreon. As a patron, you get access to a wonderful community of like-minded investors where you can chat, connect, ask questions, and share ideas with badasses like you all over the world. The best part is you get the amazing Everything Money software. This is revolutionary, unlike any YouTube page. You can track your investments, look at stocks, and quickly run our 8-pillar analysis on any company you like. The top tier patrons get direct access to Paul and Trader Mo. You'll see their daily trades, their updated portfolios, and every options contract they write on a daily basis. We provide Patreon exclusive videos just for you, including live streams and exclusive content from our team. Our bottom patron tiers fill fast, so join today. But hey, if you don't believe me, look at all of our patrons' amazing success stories. In comparison to other financial platforms, our software is by far the best value. This is your chance to get serious about investing. If you're finally ready to level up your investing game, join our Patreon and let's start kicking ass together.